small bull, up to 2,000, almost 800, down again to 2,000, up to 2005, down to near 2,000, up to 2,720, down to below 2004 on Friday. Now this is a trend. Trend. So how do I do this? What do I do? You see the charts here that you see is actually the graphic representation of the psychology of the market. Players buy, players sell. They buy or sell based on their own research and reasoning, okay? Now the charts that we have here tell no lies, no lies. Trading is a decision process, all right? So we have to make up our minds, what do we want to do, when do we want to buy, and where do we want to sell. But my job here today is to show you, my job is not to sell here at the peak. My job is not to buy here at the low. My job is to sell when the market has finished peaking and is on the way down. And my job is to buy, not here, but when the market is up and is confirmed that it's on an uptrend. Now that is my job. Not to buy at the bottom, not to sell at the top. Now, what I utilize are simple moving average lines. These moving average lines which I use here, the blue one is the 5-week moving average, and the red one is a 2-week moving average. Simple. I repeat, the red line is a 2-week moving average, the blue line is the 5-week moving average. Now, this moving average line will help me to, firstly, to define the trend. Okay? And secondly, to recognize changes in the price trend change. Now, this is it. There is nothing else this moving average are good for. Now, what I'm showing you here must be backtested a minimum of 5 years for its effectiveness, or else don't bother to look at it. Best if you can backtest it for its effectiveness and success calls for 10 years. I normally backtest it for 15 years. Okay? Now, we look at the very recent period here. This is a very recent period. Okay? Now, this is 09. Let's look at 09. Now, how do I get my calls? When my 2-week moving average cuts above the blue line, which is a 5-week moving average, that's a call for a buy. When the red line, which is a 3-week moving average, cuts below the blue line, 5-week moving average, that is a sell call. Buy call, sell call. Now, you look at here. From the peak, right, there was some congestion. The sell signal was given here. The price then was about 3,005. 3,005 here. You will maintain your position on a short, right, as long as this 2-week moving average line remain below the blue line. You maintain it. So in other words, you probably short around this region, the bearish area here. We'll say probably below 3.5 or even 3.3, right? And then they whack all the way down to a low of 1,300. You maintain your position. The market is full of noise, out to deceive you all the time. Unless you have a program which is solid as the Northern Star, you'll find that you will get kicked out of the market on your hedge positions, even you are right. You're sitting on the right position. To trade successfully or to hedge successfully, you've got to look at the market with blinkers on, like a prize horse running for a big prize. Blinkers, only see in front, no side. Noise, and more noise in terms of information and statistics. Okay? Now that was, and then come 09. 09 there was a buy here, somewhere over 1,006, where the market triggered a buy, but red line cuts above. And then they maintain above the blue line with the buy signal intact, despite some congestion here, all the way up to 2008. From this buying level of 1,006 to 2008. That's a lot of money, isn't it correct? If you're a producer or a refiner doing a hedge. Am I right? Yes or yes? Yes or no? Yes or yes. Okay? And then in June, July, right, after hitting the 2008, I never sold here for any of my clients. Never sold here. I only sold here when the market cut and gave me my signal to sell at about 2,500. 2,500. All right? So you sell 2005, all the way down to slightly to 2,000 ringgit. Quite a big move. About 500 ringgit move per ton. Can you see this? Okay, I didn't buy here when it hit 2,000, neither did I buy at 2,050. I bought here about 2,150 level when the signal was given on a buy. And then it went all the way up to about 2005. Now this is already somewhere in August 2009. And then came the sell signal here, the sell signal, slightly above near the 2,300, all right? And then week after week after week, it came down to back near the 2,000 ringgit. Similarly, there is a buy signal here at about 2150, buy signal. That is somewhere in November, late October, early October. And then the market went from 2150 all the way up to 2720 here, 2720. Of course, here while we were in Bali for the GAPKI conference, Mr. Mistry was extremely bullish, right? He jawboned the market up successfully, wonderful. So he jawboned the market up here from 2,000, about here 500, all the way here. Bull, 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 all the way, all right? And then the sell signal was given here some 3 weeks ago at about 2550. And as of Friday close, the signal that I got on my program is still saying a sell position. So what I'm showing you is something very simple. Due to time constraint, I can only do this for you from 2008 to 2009 until the current. But if you could sit down with me for 5 years back test, 10 years back test, 15 years back test, then I'm very sure that you can be fully convinced that there is something that works in our market. Now, very interesting, isn't it? Now, on the price outlook, right? My job here is to tell you what's going to happen in 2010. But if I told you what's going to happen in 2010, it may be a bit difficult for both of us to believe it. Why? Because 2010, to the end of 2010 is a long time away. So what I would like to look at is perhaps maybe for the first quarter of 2010 and then for the first half of this year. And then look at the market again after mid-year, all right? Now, as I look at it here, crude palm oil fluctuation in 2009 has been very docile in comparison to the 2007, 2008 period. Now, these were great volatility. Volatility was simply at its peak. But remember, during this volatility, not a single drop of palm oil was defaulted in the derivative market. Not a single ton. I'm sure you know how much of oil was being defaulted and deferred in the cash market. So that's the beauty of a futures derivative contract. Now, this scenario is likely to persist at least into the first half of 2010. In other words, this kind of band trading, you know, movement of 4 to 500 ringgit movement, likely to persist into the first half of 2010. Now, the 50% retracement report at 2450 was violated last week. 50% of this move from 2000 to 2720, the market, the 50% retracement is somewhere here at 2460 has been violated, and the market has closed lower than that. Now, this is a very clear signal that the traders are beginning to lose their bullish confidence, and people are getting a little bit shaken out of the market. All right. Now, considering the fact that the market now is giving us a sell signal, if the bearishness persists, right, then I think logically the market would move down to test its next support level, which is the 75% retracement. This up is 25% here, 75% retracement at around 2280. Write it down, 2280. Basis third month contract, third month contract. Major support till mid-year now stands at the 2150 and 2100 level. This is the major support here. You see, previously when it came down here and here twice, right, the market did a rebound. But this time it's the third time testing, right, 2150 to 2100 level. If it breaks, then you know that the market is set to take a bath. Take bath. Okay? Now, these are the projection. Now, upside, a major price resistance now is seen as 2650, 2700 level. The signal is still sell, but the major resistance is here, 2600, 2700. That is the resistance, the overhead resistance. Now things are likely to turn very bullish if these overhead hurdles are successfully vaulted. But for the moment, there is no chance yet. We have got to wait for this move to bottom out and maybe the next time around. Now the market has an immediate upside target at 2,850 to 3,000 right up to June in the event an upward break above this immediate resistance, which is at 2,650 to 2,700 level. I repeat, the market has an immediate upside target at 2,850 to 3,000 in the event of an upside breakout. Now, what I've shown you today is something simple, which will help you to call a fork, and a spoon without too much of a hassle. Any person with a simple PC that has got moving average without hassle can do right this. Can do exactly this. Very simple. Now, while I was out there just now in the morning, somebody asked me, Teoh, he has been, I wrote for the Star for 23 years on palm oil and stock market and soya oil. 23 years, once a week, they gave me about 2 pages. And after 23 years, I was quite sick and tired of that business. I've decided to quit in October 2008 after having earned quite a comfortable remuneration. Now, somebody asked me, do you conduct workshop for private individuals and stuff? I said, yes, I do. I do conduct for a specific target crowd. Now, being in the palm oil industry, I'm sure many of you came out of university and colleges with your MBA and master and all your degrees, right? You're trained in everything except to trade, except how to read market effectively. Now, on the 6th of March, 2010, which is a Saturday, full Saturday, I shall be conducting a traders workshop. I call it Crude Palm Oil Futures, Harvesting Profits. Now, during that session, I will teach traders how to hedge and speculate and how to time your trade. Now, I can tell you that this one here is a buy, this one is a sell, this one is a sell, this one is a buy, and this one is a sell here and the buy here. Now, I can tell you all this, but eventually when you come to the real nitty-gritty of the business, you've got to learn how to time your trade, your entry point, your exit point. And we can also backtest what we tell you, okay? We will talk about these things that has got high winning probabilities. In other words, each time you hedge for your company, you find that you're on the right track. Now, I believe that if you change the way you look at market, you can prosper from it. Your company can prosper tremendously from it. And then I'll also talk about effective chart patterns, their interpretation. Because remember what I said, the charts are actually the psychological mirror of the market. Now this is in 6 March, Saturday, and after this, I will follow it up with a 3-month, every month, for 3 months, 2-hourly tutorial and mentorship program, which is free of charge. But of course, to attend this full day one in Kuala Lumpur, you got to pay for it. It's 10 to 5 o'clock. Now we're giving some discount for people who choose to sign up today. On the way out the table there, you can look for a girl by the name of Li Ling. On the table is written there, registration for this workshop of mine. So I hope you can come along so we can talk more about the palm oil story. Now, okay, question and answer, 5 minutes, yeah? I would appreciate some questions from you, and I will give you the answers that you want.
Thank you, Mr. Teoh. Ladies and gentlemen, that was an elegant presentation running you through what is going to happen to the CPO markets in the near term.